Wow, guys, United Health absolutely battered, down 20% after some comments from Trump about the increased rates basically getting cut potentially. Not a confirmed thing as of yet, but also United Health's earnings were quite lackluster here, so they've been punished severely for that, and the stock is down massively. So where are some levels that we might be looking to enter a United Health position if we are interested in owning some healthcare, some insurers, some, whatever? Are we bullish on the stock? If we are, where are the levels? Well, the first one that I can see is we have a gap here, around the $272 mark, which we are probably going to be filling. We are coming down to get there. The stock had come up previously. I don't know if this was from the Warren Buffett Berkshire Hathaway getting invested in the stock or if that came a bit later. I wasn't really tracking it, but regardless, the stock did gap up. So we're heading to fill that gap by the looks of things. You could enter a short-term sort of swing trade position here. Maybe not swing trade, but shorter trade bounce, potentially a little bit of a recovery after this big fall in the stock. That could be interesting. The next target that I'm looking at, though, which I think we probably will be getting to after such a huge decline in one day, would be this parallel channel here, which I think the stock has essentially been trading in for quite some time, since 2020, essentially is when this channel began. And you came up here, tested the highs, couldn't break through, eventually broke through, but then the stock could not stay above and crashed down. It's something you often see with these kind of patterns. So to be honest, I think we could very, very well get to the bottom of this channel around $240. That seems quite reasonable, a further 15% down from here, but I think that would be quite a good entry point if you are bullish on the stock. If not, then it might break down. If we were to lose this parallel channel, it would not be a good sign, to be honest, but you might see the stock come down here. There's quite a lot of support in this sort of region, around the $210, $208 level range. And failing that, then you'd probably be looking at a double bottom around here. This was support in 2020 before you had this huge run, so I would imagine the stock would be caught around $190, $188 at a sort of worst case scenario, but that would be quite a sizable move. You'd be looking at 33% down. Obviously, you're not going to be really wanting to hold a healthcare stock through that decline. That's probably going to take some time to play out as well. So depending on how bullish you are, you may opt to open a short-term position at this level, 272 or perhaps 240. Failing that, there are targets lower, but we may get there, we may not. We'll have to see how things play out for the stock. A little bit hard to say, but those are the levels I'm looking at. If you're looking at on the upside, where would you get out? I would be looking at this sort of trend line here. It's quite an interesting trend line, which I'll draw in. Something like this looks pretty good to get out at the resistance at this point, around $430. If you're not willing to let it ride and see if we can get back up to the $600 mark, this, the top of the parallel channel might be a little bit optimistic at this point. So I'd probably be trying to exit around 430 for a longer term trade. But by all means, if you're very bullish on the stock, you can feel free to try to let it ride up to the top of that channel. That being said, yeah, be careful buying this one. I'm not sure how it will do. Obviously, it looks tempting at the bottom of this channel, but I could imagine it breaking down just to test the resolve of the buyers. And, if things are looking particularly bad, then we could see that happening. But with that being said, I hope that's helpful for you guys. Do subscribe for charts daily, and I'll see you next time. Bye-bye.